Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 17th of September. So I've seen a pretty rocky start to the week this week. We've got some big news still coming out, and we've also got quadruple witching go up. So realistically there's still a lot more volatility to go and a lot of the majors are starting to move. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here on the Aussie USD. You can see that we've had a really big move up and it has actually certainly pulled back in this New York session. So what was looking like, only 6 or 7 hours ago was a very, very strong move because we saw the lightning bolt on a daily chart, which is a very big deal, obviously. It broke past this very important resistance zone and past the 20 moving average, and it was looking for all intents and purposes like it was going to be a very, very strong lightning bolt. But subsequently, it has pulled back all the way down to the 20 moving average and this support zone, which will be support from the way up. Now, the problem we're going to have here is if it does close with a big candle looking like this, with a big rejection off these levels, it's going to bode a fair bit of weakness for the Aussie USD. Okay, so realistically, the next few hours are going to be very, very telling. Like, we've still got quite a few hours of trading left in the session. So really, where this ends up is going to be the key to what we do with it, I guess even today or early into next week. If indeed we do get the movement back up and it closes somewhere near the top, we're going to get that confirmed lightning bolt, and it's going to be very, very strong for the Aussie USD moving forward, and that will probably lead into a continuation of this trend early next week. So very, very important session coming up. Now, if it does, of course, close around this level or even below the 20 moving average, which is also below this roll reversal zone, then that's a telling sign that it is running out of steam and the bulls were not able to take it up to the new levels. And all of a sudden, there is no lightning bolt and it's looking fairly weak and at a point of reversal again. Very, very important to remember that a lightning bolt must be confirmed. Okay, so even though price did push higher and look for all intents and purposes like it was going to make the lightning bolt, it didn't do it. Okay, very, very important that we take that into consideration. So just be mindful of that when you look for any of these moves, that we do actually get the close. Okay, so what we're looking for is the lightning bolt effect. To say effectively, we're looking for that, and then we're looking for that. Okay, so the exact same move that we saw, but they must actually close. The candles have to close to actually confirm that pattern, and if they do that, it looks very, very strong because, like I said, it's broken a very important level of support, which was support over here, now is resistance. So that's a roll reversal, as you know. So keep an eye on that one, and we will see how it plays out. All right, we'll move over to the US Dollar Cad now. The US Dollar Cad is another interesting one. We've got basically a test of those highs again. We talked about this last week. We saw a really, really big move, and then, as you can see, it tested these levels earlier this week, and again, it actually sold off. And you can see right basically to the pip of the previous high, the most recent high, extraordinarily strong level. That's around the 129.20. Effectively sold right off there, and you can see it's all the way down now at 127 sort of 72. Big sell-off, but it's basically working its way down to the 20 moving average again. Look, at some point, this is probably going to break up higher and then really continue on, so it's going to make this level look a bit ordinary, but what that level is going to provide is an extraordinary amount of support when it does eventually break through. So rather than trying to preempt what is actually going to happen, what we're trying to do here is actually wait for the price action to actually break through this. I'll draw a line for what I'm talking about, this level in particular. So what we want to see is a build-up of momentum from around the 20 moving average around here and a close above this level here, which is around that 128.70. What we want to really see before we're really convinced this is going long, we want to see a close above 130. Okay, but we're not going to try and get that in the first go. What we want to see is a break past this level, and then we want to see it actually come down and test from above. So what we want to see is this. Okay, and then we want to see a test from that and come down here and test a level from above, which is now a support zone. So what was resistance will become support, and that is the real launching pad for the big moves up to 133 or 134. We don't want to preempt that, but if it can happen, and it certainly could, that is the way we want to trade this one. We don't want to be the first one into this trade. We definitely want to be waiting for that confirmation. Really, really important, but in my mind, very easy trading. I mean, we talk about this all the time. Very easy to see that it was aiming for that 128, 129 level again. So hopefully you're able to get some scalps there. and of course you knew where to take profit and potentially reverse your position. If you go down to the smaller time frames, yeah, you can see here very clearly that when it did sell off, you could see the touch of the 20 moving average, which was key, and the 4 hour is basically, although it hasn't touched the 20 moving average again, it's well and truly broken it and pushed past these levels. So pretty easy trading really, especially on the way up. So hopefully you're able to capture some of that. You can see here on the 1 hour how easy it was to actually get those 20 moving average pullbacks and join that move up and actually take advantage of that. So hopefully you're able to get hold of some of those pips. All right, we'll move over to the US dollar yen now. So again, this level has been tested and has in the first instance failed again. You can see we were starting to pick up some momentum. You can see that we've got effectively a bit of a pattern happening, but as I said last week, we were in the middle of a channel, and the only way we were going to trade this with any seriousness from a swing point of view was to get a daily close either above the 114.25 or below the 112. Okay, so it hasn't done that, but what it has certainly done is gravitated its way to the top of this mini channel that has formed. So what we're looking for now is basically a close above this level on a daily chart. Now, this could happen very, very quickly, especially with really important news coming out tonight. And once quadruple witching hour kicks in, volatility certainly increases in the markets. Although it's more factored around stock and indices, currencies just move in sync anyway. So you're going to see the volatility across the board anyway. So what we want to look for is a daily close above this level. Now, the dollar index is going to play a bit of a role in this. We're going to have a look at that in a second. But really, this has given us a good opportunity that if you were trading long, you knew exactly where to take profit again. Very, very logical zone. You know all the resistance is there. Until it breaks this level, we're not looking for the 115 move. We're just looking for scalps inside this channel. Now, we need to go to a smaller time frame, of course, to see how quickly that sold off. Once it did touch it, it was basically a very quick and instant sell-off. The 4 hour one happened there. 1 hour candle basically took away all of those gains from the previous 24 hours. So again, it finds itself right in the middle. So realistically, here we play this one now. It's not quite in the middle, but it's in the middle of the actual channel that has been formed, this little mini price channel. Although it broke out there, we can consider it a support and resistance zone. There's no question about that. I'll bring it right up here. The 112 is the area we want to see broken though before we actually go significantly lower or try to trade that way. Okay, so realistically, trade inside this little mini channel for scalps until we get a good move down to either the 112, which is the area that we're focusing on for a breakdown and continue down to the 110, or a daily close above the 114. These are very, very important zones. We want to make sure that we basically wait for the confirmation. So a break of this level there, or a break of that level there. Once we see that, we know that we're going to see some good long trending action. Whether that happens this week into next week, I'm not sure. We're going to have to wait and see on that one, but hopefully it will, so it'll give us some trading action early into next week. Of course, with Christmas Eve next Friday, we're probably going to see a weakening in liquidity and a big drop in probably trading. So just be mindful of that, the breakouts might be a little bit faker than they normally are. All right. Dollar index. So the all-important dollar index is one that is going to govern what the US dollar-based pairs are going to do, of course. It's still finding support at the 20 moving average. It's again tested the basically recent highs of 96.80. Okay, you can see that it sold off there as soon as it touched it. So this is a daily chart, of course, so pretty important chart. 20 moving average is still holding it up. Okay, so and it is condensing. Price is starting to build up a little bit of momentum and congestion in this level every time it moves. So you can see it touches that level, pushes down past for a bit of momentum, then it kicks off this level with momentum again. What we want to see is a big momentum shift up and break this level once and for all. This level is one of the most important levels for the dollar index in recent history, mainly because you can see all of the support and resistance that was here for many, many, many years. Okay, that's if we go back even further, we've gone back to 2018 here. You can see that there was a lot of resistance and a lot of support right through here. Okay, no surprise to see it doing what it's doing here, rejecting off this level. When it does eventually break it though, it really opens itself up to a 98-99 move. So this is why it's so important. So you can see here, like I said, that's 4 weeks effectively in a row now where it has attempted a big move either way and ended up pretty much in the middle. Okay, so what you want to look for now is a momentum shift. Like I said, it's starting to congest and it's getting tighter and tighter. As the 20 moving average moves up closer to the overhead resistance, it's congesting price. So we may see a breakout It could certainly happen after today's trading, after the US trading session. But yeah, more than likely, it's probably going to be early next week where we might see some action. Hopefully, I'd love to see a break early in the week up above this level, and then we know what we can do with the other pairs, of course, with the CAD and the USD, or especially the Euro USD, which we'll look at in a second. Failing that, of course, a close below the 20 moving average is going to signal a sign of weakness, and that might be the catalyst to actually see the other base pairs, the US based pairs, start to weaken a little bit, and the Euro USD kick on. So this is we're watching this level very, very carefully. Okay, a break below the 20 on the daily is a significant sign of weakness. I would want to see it down below this level here to be convinced. So be below the 95.50 daily close, or above the 96.80. So in my mind, though, I would rather wait and see a break above this and a retest from above to find support at that level. That is a true trade there. If we get that, that is a trade that we really want. All right, Euro USD time. So, of course, the exact mirror in reverse of the dollar index. Same deal, though. Look, it tried to push past the 20 moving average and has failed. The all-important support at 112 is holding up at the moment, but the 20 moving average is bearing down on it and pushing price down closer and closer. So the lows are starting to get a little bit lower. The weakness is there. There's two ways you can play it. Look, I'm not really fussed either way. Both of them make sense from a technical standpoint. If we get a close above the 20 moving average and we get that lightning bolt, I would wait for the lightning bolt, though. It wouldn't be just a close of the 20 for me. It would need to actually make a significant price lightning bolt off this level here and find some movement and momentum to kick off this level. We've got a very clear target, of course. We know where we're going. So there's plenty of pips. The first point of call is going to be 115. So there's 150 to 200 pips of trading from around this level. So there's no worries about that. It's not like there's not enough room. But the MACD is certainly signaling that the strength may increase, but this is on the daily chart. So, for a move on a 4 hour, we're probably going to see a different level of MACD momentum. So what we want to see is a break of this level, and then we start kicking on. But we want to see a lightning bolt on the way up. Failing that, though, I think the short still makes more sense because the short's easier. We're already getting weak price action. So if we get a close below the 112 on a daily, then we're looking and starting to target the 110.50. So really, really good. I like what this is doing. I don't mind that it's consolidating here. I don't mind that the 20 is bearing down on it. It makes more sense for the sell. Yeah, make no mistake. I would rather that because I think it makes more sense from a dollar index perspective because the dollar index does look very strong. But in saying that, we trade both ways, and regardless of what it does, we will take both trades, but the short will set up a lot quicker. Okay, the long will require a lightning bolt, and we wouldn't be getting into probably somewhere around this area here. So this is why I'd much prefer the short and the break of the 112. So either way, we trade this one, but I like what it's doing, and I like that the levels are being respected. So when they do eventually break, it will break with a little bit more significance. All right, we will move on to the all-important S&P 500. You can see it tested the highs here again and failed. It did basically make, at some point throughout the session, it did make an all-time high. Again, the 47.50 was hit, no question about that. Sold off, fairly quickly, and you can see it's been a reasonable sell-off too. It's been about 60 points. Look. Yeah, we've still got a lot of volatility to come this week. So, what it does, it's going to be a very difficult trade to try and preempt what's going to happen, through the quadruple witching hour, which the S&P will be affected by. The volatility will pick up here. There's no worries about that. I will wait on this one. This is probably not one I would trade this week. I would wait for all of the news to be out of the way and look at it with fresh eyes on Monday. So realistically, if we close at an all-time high on Monday, then you would think that the Christmas rally is on in earnest, and we'll be looking for long opportunities all the way to Christmas and early in, or basically through that week. If you want to trade that week as well, we'd be looking for strength. But in order for the Santa rally to kick in, I would have to have this above the 47.50, so it has to close at an all-time high for mine for this rally to have any significance or any bearing on what's going to happen. Failing that, if we see weakness, then I think that we're going to be starting to push back down to that 45.50 again. I think we've got two very, very well-established zones, and I don't mind either of them. But for mine, if you want the Christmas rally to kick in, and we're going to get proof of it, it does need to break this level here with a daily close. Not just touch it, it needs to close above there, and it needs to do it after the quadruple witching hour and after all of the news is out of the way. Basically, every bit of news that needs to come out this week needs to come out, and we're not going to know about that until Monday. So that, to me, If we get a close of the New York session, the Friday session above this level, we're comfortable with the Santa rally. If we don't, and it looks something like this or even weaker, then maybe Santa is not going to come and play this year, okay? So keep a very, very close eye on that, but I think the ranges are very straightforward. All right, the last one we'll have a look at is gold, because gold is starting to, well, it certainly found the base at this level here, and it's really, really trying to get to 1800, which is probably a little bit, ominous for what's about to occur. I like what it's doing. I like that it's starting to pick up and push up off a very, very important zone. We know the 1770 and 1780 levels were very strong. You can see that it was previous support, and found a little bit of resistance underneath it as well. Once again, it's finding that support at the all-important zone. If the daily closes above all of this noise and moving average, I would be very, very pleased for looking for long opportunities. I think for me, it needs to close above 1810 to be convinced that the long might start. We know historically gold is very strong and does move quite significantly for the first 2 months really after the week of December starts. So we've seen that in historical charts. So moving up to a 1900 would not surprise me at all. In fact, I would almost expect it. So if we get to an 1810 level and we get a close above there, and that's where it's hovering on Monday, the Santa rally might not be in, but the gold rally may well be. So that's what I'd be looking for. I think one of these is probably going to fulfill its potential, and gold might be the one. So I'm happy with either of them, because I think both of them make sense for this time of year seasonal trading. But again, even though we've had a very strong move out here, I'm not going to be convinced about this move's continuation until we get a close above the 1810. And if it does that, then it opens up all the new levels. The first one being the 1830. Then we've got the 1850 level, as you can see, is a very strong level as well. And then, of course, on to 1900. So realistically, you got 3 levels for gold. If it does go long, you got 1830, 1850, and 1900. They're all your take profit targets. Now, for the short version of this, if it does indeed go short, it breaks down completely and closes below the 1750. That's my cutoff. If we get a daily close below the 1750, that is the one that's going to convince me that it's probably going back into the 1600s. So we don't really want that for gold. I think I'm a lot more comfortable when gold's above 1800 than I am when it's under that, because I think it provides a lot more trading opportunities that make a lot more sense. But again, we are technical traders and we trade what we see. So whichever one it does, we will play out. And of course, any scalping that you're going to do in the meantime needs to be relative to those time frames, just to make sure that those levels don't really cost you too much money. So if you are going to trade long in the middle here, just make sure you got enough profit before it reaches the 1810, because if it's going to fail, that is a failure point. All right, so I hope everybody's had a great week's trading and a great year's trading, actually, because today is the last Friday wrap for the year. Because the next one's going to be Christmas Eve, and there's going to be very little trading, of course. So I hope you've had a really, really good trading year and found these videos informative and educational. Hopefully you've been able to capture some really good moves this year. I think although we've had a tumultuous year in terms of the economy, I think we've seen some really good moves in the currency and indice markets. So hopefully you're able to take advantage of those and learn plenty. And I really look forward to seeing you all early in the new year to kick off what's going to be a very exciting 2022. Have a great weekend and Happy New Year to everybody and Christmas, and I look forward to seeing you early in the new year. Thanks, everyone.